It's 87
Ladies and gentlemen, welcome back. It is Wednesday, September 18th, 1:12 out here on the West Coast. That means it's 4:12 out east by Bennett. Bennett, we finally saw him cut rates today. How we doing?
First time in forever, it feels like.
2020, long 4 years.
I can't believe it's been that long.
Yeah. So let's jump right into it. Let me get into the charts. All right, so we saw him cut rates 50 basis points. That's kind of what I was hoping for. And I was coming into this meeting saying, from a trading standpoint, the market can be lower today, the market can be lower tomorrow, the market can be lower over the next week. For the next 1 to 2 months, I think it's higher. So I didn't do anything today. I didn't get caught in that trap. Very, very thankful to have the experience of seeing so many Fed days and seeing how difficult they make this action to not get sucked in. I think that's one thing we all really did well as collective today. Is not like buying that first move higher. What happened was we spiked higher, we chopped around all day, we ended up closing at lows. We're at the top end of the range here in the SPY. You could say this is starting to look like a failed breakout. I'm not convinced of that yet. Notable reversal day is the day after Fed. And if we come down, all right, we made this big run off lows. If we come down here at 550, 555 in the SPY, we get bid up. To me, that's a great buying opportunity for a move through highs. So definitely not counting out this market yet because we closed at lows today when, we're 0.25% off all-time highs, So it's not like we saw the market get punished today. It's not like we saw the market rip. We didn't see the market do anything today. It was just digesting this news, and market makers were probably banking on rookie traders just trading this chop back and forth. Take a look at the Qs. A similar sort of thing. I think I got kind of the same take here. It's like if we come down and see this hold the bottom of the end of the range here, that's a great setup. Now, if we see the Qs here break this 480, that is going to be motherfucking buy o'clock. Okay, take a piece of paper, write down QQQ 480. When we see that break, that will be a feast. So I'm kind of like right now I'm a bit hands off, just taking the market action. It felt great to do nothing today and watch. So many of these Fed meetings in the past. I feel like I over traded, had to be involved in the action, blah, blah, blah. Today I was just sitting back and watching, got some great information, didn't get hurt, and feeling good. Now market's gapping up after closing at lows. So we'll see what we get tomorrow. I got a bunch of charts I want to go over, but I'll pass it over your way first. If you want to get into anything.
Yeah, I'll go over a couple of sectors really quick. Second. So it seemed like the small caps, like during the Fed meeting, were getting like the most love, somewhat intraday.
There's one thing I wanted to say about broad market stuff, and sorry to disrupt you.
No, go for
it. Everything, and this is what I was sending out in the letter last night. I sent a little Fed preview out. Everything has to be taken in context of the market. So yes, the small caps closed well off highs, but look at that run they've been on the last 4 or 5 days leading into this. So it's not like, oh, it's time to get bearish because it's like, no, it's at the top end of the range, very strong, still in the daily. Overall, it's like, I'm more so in wait and see mode, but also I haven't seen anything bad happen today. There's nothing overly concerning that happened to me today. So yeah, back to what you're saying.
Yeah, so okay, just out of the major indexes, it seemed like the small caps were getting the most love, during that Fed meeting. Again, like you said, most of the index kind of reversed into the close pretty weak, but they were waking up again. It seems like most of the major market sectors kind of ran up into the Fed meeting. Like this was like it's kind of across the board. We kind of scanned through some sectors that just we're still in this range bound market for the most part. And just some of the ranges are much bigger than the other ones. We could see that here. Mid caps, same thing. Very beautiful bull flag. Ticked new all-time highs, or basically ticked pretty much close to 52-week highs. But we're in this range still, and until we break out of this range, it's wiser to sell into resistance and buy into support. And like you said, if we do get these little bit of a pull-in, I'm with you on that being a buying opportunity. Again, biotech, same thing. Textbook bull flag. Unlike an individual stock, even like the S&P, these major markets and major sectors take more than, 2 or 3 attempts at major levels to really break and have some legs behind them. So if the S&P takes 4, 5, even 6 attempts at this 565 area, isn't too surprising, but the range it's been trading in, it's, I think even said like last week, like, SPY 6,000, S&P 6,000 or SPY 600 doesn't seem that far out of the cards given, the current range that we've been on. Even energy.
January 15th, SPY 600. All right, go on.
They know. Okay, that's your call.
My call.
January, you said what, January 15th?
Yep. Yeah, I said it.
Right here. I don't know if I could set like a date alert. I don't think I think I'm with you on that I can see that happening from here. Again, once you clear this, it's, it's, what is this? 5, 10, 5, 6%, 5, 6% from there.
Cuts under the belt by then. Real estate will be coming back. That those money markets will be going down. That, sidelines money will be back injected. Lots to be excited about, if you ask me. I don't really care much about the action today. I'm thinking about over the next few months. I think things are really set up well.
Mm-hmm. I mean,
don't care at all that we closed at lows.
Yeah. I mean, again, we're starting to finally see rates coming down. It's, funny to see like the 10 years actually up today. But again, it seemed like
it front ran,
Yeah, it's like it was all into, like the market running up, the 10-year pulling in. It's, they're not really like, the Fed's not really trying to surprise us. They're trying to make it very clear what like their decisions are, where, it's not this dramatic out of the left field what they're going to do. So it's not surprising that we get kind of these run-ups or pull-ins, kind of into these Fed announcements. But like you said, sector, individual name-wise, I've been focusing a little bit more on some of the small cap names just while we're here.
I love that.
You put me on that book with I'm reading fundamental analysis from the 80s again. So now I'm like, looking at all these small cap names. But we got this VKTX, big base here under this 70, still setting up. We got this Shake Shack, big base going back to March to this 110. We can see, this was the low. We got another higher pivot low. It's a little baby, pivot low here. Just seeing kind of buyers stepping up within this range. Again, the big name I'm keeping a very close eye on is this TMO through this 620, 624 area. Just been flagging out here for, all of August. Very tight range for this name. Again, when it wakes up, 100-point moves isn't, out of the cards for this kind of name. And it's just super tight in these little, very tight inside days. So keeping a very close eye on this TMO. That's the main one. One of the members, I forget who, reminded me of this Amazon. I think it was Ronaldo. Through this 187, been set up back since 2021. Long climb back to highs. Push through back in summer. This is what we refer to like that sneaky buyback where we would be, from a trading standpoint, we would be hawking this initial break, this blue sky break, but it didn't have to follow through. Comes back in, shakes everyone out, gaps on earnings, kind of falls off most traders' radar, most swing traders or day traders. And now it's kind of setting back up when no one's really looking. So definitely keeping a close eye on this Amazon through this 190 and keeping a very close eye on this TMO through that 620, 623 area. So I know you said you had a couple of charts you want to go over, Shake, so I will send it back over to you.
Right. Check down the market after hours, gap up. We take out these highs, I'm telling you. Gonna be buy. Qs, one wants to take out this 480. It's gonna be a buy. A few names on the radar, like how it's acting. All right, Vive. Gaps up on earnings. Holding the earnings gap. Pushes up from here. That's a nice setup. In this market, you got to keep a close eye on NVIDIA. That's the truth of the scenario. I'm so tired of this name, but you gotta deal with what the market's giving you. If it fails this area, it probably drags the Qs down with it, and then we'll see there. If tomorrow's a big fake out move, takes out these highs, I would be willing to buy this baby through 118, 119. If they rip this market tomorrow, it is such a nice setup, by the way. It is such a nice fake out setup. So, I came into today not thinking I want to do anything today because I just expect chop, knowing that tomorrow's a big reversal day, day after Fed, no reversal day. If they do want to rip this higher because we did get that 50 basis point cut we liked, you know, this name will definitely be on my radar. Nice little flag here. Moving averages all converge. Wants to break higher. A lot of people trapped. I know it's everyone's favorite name to short out there. This first solar kind of got away, but it closed right at this, you know, resistance level. We saw, you know, check out the TAN. It was up huge on the announcement of the 50-point cut. Solars are just so held down by high interest rates, just fundamentally. So, you know, definitely want to keep a close eye on that. EMPH has a really nice base. I'll note that the main thing I'm looking for in setups right now, I'm not just looking for like decent setups to buy. I want to see weekly charts that can really unleash with lower rates. And like this fits the bill because let's look at a couple examples. Let's look at this Redfin. Okay. This thing has been held down forever. And it comes up and then look at this run. It goes on from $9 to $15. That's what, 66%. That was just, you know, front running rates. Zillow is another one, you know. The names that are rate sensitive, they have the most, you know, availability to run, and it just makes so much sense to me. So, you know, I'll not stop talking about this Roblox. I'm really glad it put in that pivot there, 47.50. Hoping it sets up more. Again, I will keep reminding everybody about this incredible stage one base. I think one of the best trades we both had the first quarter. Remember this hood?
Hood and cart.
Hood and cart, exactly. Stage one bases, when stocks break out at stage one base, they go on the crazy run. So if the market's setting up to do that across the board, it makes so much sense with interest rates being lowered and these names having high debt and things like that. So it's a much better environment for these earnings to grow in the future. You know, this is where I want to be involved. Like, no questions asked. What else I got on this list? This Goosehead Insurance, GSHD, you know, decent little chart here. You know, just an okay chart. We look from that angle. We look on the weekly, and it's kind of setting up one of those bases as well. If you look back, this has been setting up since technically what, March 22. It's been working on this. Another one is this Tandem TNDM. One from a chart pattern standpoint, like a daily chart pattern standpoint, my most profitable technical trade of my career has been a wedge break because you can load up on so much stock, and then when it finally makes that decision, it wants to either break higher or break lower. And if you're on the right side of the trade, the risk reward is so heavily on your side. So this one is definitely on top of my radar, 45.50-ish. Look on a weekly chart, you know, kind of breaking out one of these stage ones. You know, I guess this would technically be the break of the stage one, and that now this is the secondary flag it's working on. I think that's, you know, a really great setup. Clavio, this thing, man, I have a feeler in this name. When it was here, I had the largest position of my career by a long shot, and I did not make money, and it was quite painful to the soul. So I have a feeler in this name. I didn't get a chance to load up. I guess I should have, you know, would have been more aggressive down here at lows. But if it comes and retests this area, maybe even dips back further, 32-ish, definitely look to buy that one. I think it's at these highs in no time. Just a really great base setup. It's SE. What did this do today? All right, this isn't giving a lot of opportunities as well. We look at this one, you know, it's strong daily chart. Kind of gave an entry down here. We had an alert for it. Now today closed strong. We look on a weekly chart. This name was such a dandy during the 2020 run. This thing went from 40 to 400 almost, but still insane how much this name can run when it runs to one. Now it's been hiding since 2022 bear market, sitting in this huge stage one base. I got to turn the volume off because you can't even see it. But, you know, over the course of, you know, the next few weeks, this name breaks this, you know, 90 area. What are these highs? This 89. You know, this one, you know, should get off to the races. And something I want to note is, like, buying 90 is they're gonna make it very difficult. Like for example, this Roblox. Let's look at the daily chart of this Roblox. If they rip it tomorrow, I don't want to buy that 47.50. And something I've learned throughout my career is just buy it when it sets up, even if it's not the perfect, macro entry or whatever, because it might not give you that opportunity. A perfect example recently is this cart. I was in this cart. I took a lot off yesterday, begrudgingly, because it broke out today. But again, has this nice pattern. And again, where did it set up? It showed this little ignition bar. Then it's set up here for 36. We bought this 36 against 35. And now we're catching the run. But if you wait to buy this like 37.30 pivot, or you wait to buy 39 or something, it's just not a good entry. So you want to buy these things when they set up. This Roblox, for example, another example is it's set up here at 45. I gave you an entry. It hasn't done anything yet, but if it wanted to run, you look back and say, God, that 45 was the entry, right? So you just kind of got to hawk these things and buy them when they set up. Where are we going from here? Oh, you took this one from me, this VKTX. I think it looks so nice. Weekly chart, so nice. This is a huge buyout target, and these big pharma companies, they really only do they get their huge growth from buying these companies. Just reading up on reports of the company, if they were bought out, it'd be like 150, 200 a share. I know that's not how we trade. It's just good information to know type things. So very, very difficult name to trade, but when it runs, it really, really runs. Nice inside day, coiling up before the level here, that 70, 69 area. Very nice. So I'm with you in that one. Did I miss any? This Vera is okay. I didn't catch it. It's a really, really nice base. It's a biotech. As you mentioned, the biotechs look phenomenal. So, would love some exposure there, but thin name, so hard to trade. It's set up here below 38. That was the best entry for sure. Now it's kind of top end of the range. I'm going to keep an eye on it, but that's this CPAY. Thinner name, just a strong chart setting up really well. Tight consolidation below this 310. Strong run up, flag where it doesn't really pull back, just goes sideways and digests, and now it's setting up for that next move higher. So 39 looks good. So that's the gist of it to me. Going forward, I'm just, I'm going to be watching the market closely. Again, if we do get that set up where we take out today's highs tomorrow, I think it's a great setup to buy. I think that'll be a great shake and bake. If we just push lows tomorrow, I'll just kind of be patient and see what's got the relative strength. But I still think the market's got a great setup. I still think we're gonna have a great run into year end. We got that 50-point cut. They're thinking they might go another 25 November, 25 December, which would be the best scenario for me, in my opinion. So I don't know. Very excited about the market going forward. I don't really care about us closing at lows today. I personally, from a personal trading standpoint, I'm very happy about the market action we had today. If they just ripped it and I wasn't ready to buy, I would have been a little sad Sally on this little podcast or whatever we're calling it. So overall, kind of happy from an opportunity standpoint of how they traded it today. We didn't catch the FOMO. We didn't get caught buying that first break. So good on us. They didn't really do anything. Didn't get hurt. All good in my eyes. Any closing thoughts?
I think that's it, man. I think you covered it.
All right. So going forward, most important, find those six stage one bases. They get into that stage two breakout phase, like the hood. That's still at this point, however many months later, I think that's my top 3 names of the year. And if now that we're lowering rates, these companies' forward earnings estimates are just going to fly. So it's the market looks forward. The market loves growing earnings. That's where I'm 100% focused going forward. So I think that's all we got for you. Comments, likes, shares,
rate cuts, whatever you guys can do.
If you got any questions for us, we're always happy to answer. But other than that, catch you guys next week.
If you think you're going to get rich overnight trading, we're not for you. If you don't want to read daily or weekly to improve upon yourself, we're not for you. If you're not interested in saving weekly and building your accounts for the long term, we're not for you. If you're not looking to improve yourself daily, we're not for you. If you do want to build wealth for the long term, read weekly, save weekly, do all the right things for the long game, then we might be for you.